Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So if you look at the indices, basically it was a nothing from nothing day, and even throughout the course of the day, not much went on. We did have a little bit of a pullback, in the morning, but it was met with buying. I guess this is what happens when you get a VIX that's been just trashed, and when volatility falls, whenever you get down moves, you could maybe cover some of your hedge, but if you've been pressing on any of those little down moves, you basically lost more than when your hedge that goes up in the up move. With that said, I was also talking today a little bit about how everyone was complaining about the VIX being broken, the VIX not correlating to the market in December. Why is the VIX going lower? And a lot of people lost money trying to buy it. A lot of people, were just thinking that, who knows? It was definitely something that was, out of sequence, but typically it means something down the road. And what it could have meant is that we were going to have this slow, methodical, low volatility rally, which we've seen. So you combine with what the VIX was telling us back in December, then you combine this chart of the S&P, you take a look here of a few of these patterns that we follow very closely, whether it's the low, the high low. Remember when we held that Fibonacci retracement right there? Went to resistance, held the Fibonacci retracement again. And then right here is where you had this wide range bar, that December 20th gap and go that I talk about. And then you had breaking of the downtrend and holding it. So you had, your buy opportunity here, another buy opportunity here, and then that low VIX or that crash in the VIX that we had signaled that we were going to have this low volatility, methodical move higher. That's had a lot of good rotation, a lot of good setups. People holding, multiple positions have been definitely rewarded. I started out this move trying to hold multiple positions. I think last Wednesday I pulled back finally from 8 to 15 to like 3 to 6, depending on what goes on. And all in all, so today you saw a little bit of a down move, but it was met with more dip buying. It definitely was a very stock-specific tape where they rallied Apple right back to the highs or right back, into the game. If you take a quick look here at Apple, still hanging around. Earnings are tomorrow at 3:30. It's tough to handicap Apple this time. This was when technically, I loved it when it broke above. You had this wide range bar on that December 20th. Here was your resistance. This was your buyable pivot, and then also when it went into this gap, you remember when we traded that to close this island top. And now we're coming into earnings. Now you have to figure out if you're an investor for the longer term, or you want to sit out, wait for the number, and then perhaps have the chance to buy it above the high here of this 431, or if you want to, if they miss, short it below here for a move like we saw with Google. I do love Apple as far as their company. I love their product line. I love their growth story. I just think that, their PE isn't high. And as much as I'd love to just be long the stock into earnings, it's just not what I do. And then with the option expiration on Friday and a big time value, I'm not sure exactly. I might just avoid it and just trade it, after the number. As far as real quickly, Google, nothing really here. Little inside range. We'll see how this inside range develops over the course of the next few days and see maybe we could buy it for long into the gap or short it for a move down to this 200-day. Amazon continued some of its weakness. Here was your nice little descending channel we talked about, coming in, it broke above, good little trade, and now it just kind of broke down. I would think, tomorrow we get it down open. I do think that this should be buyable for a trade, so we'll take a look at it, maybe use today's low as a pivot, which was, I believe, 185.23. So we'll see what happens there, but it just shows you how you need to know your time frame. Even Netflix, all over that thing. We were talking about it 75, 77, had a huge run. Sent out many notes that I was getting out of it around 102-ish. Then Friday, it gapped up $1, and then it went negative and showed some relative weakness, and it was worth a cute short. And now is a day when I get a little upset because I didn't even look at it today, so made the hard money from up $1 to down $2. And then you look at Netflix today, why not trail some? If you look here at Netflix, you had, once it couldn't get above Thursday's high, that was a bit of a sell signal. And then once it crossed this 2-day range and invalidated this last little breakout, it was a nice little short. So today it was down like $5-6 back in this area. I guess we could tomorrow look at today's low as somewhat of a pivot, depending on how we open. But Netflix is coming out with earnings on Wednesday, so we'll see what happens. I'm probably going to trade that one after the number, not into it, because I have no idea what they're going to come out with. To me, it was a treasures for trash trade, or trash for treasures, whatever you want to call it. It was a very highly shorted stock. It was a great 2-week trade to the long side, And then even for those of you who wanted a cute short, you had it, and now going into earnings, you better do a bit more due diligence because no one really knows, and we'll look at the price action after the number. As far as Shield was actually my trade of the day, where I haven't traded Shield in a long time. Unfortunately, I missed the long side when it went into that gap, but again, I also missed a lot of pain on the short side, of which a lot of people have been trying to be short. On Friday, I started looking at it. I couldn't get a locate, and then even this morning, I was looking for a locate, and thank goodness I didn't get one until a little bit later in the morning. So, but if you look at Shield, it did my classic 80-20 reversal trade. Okay, that's what happens here when it pushes through a previous high, which was 51.17. So anyone who was shorted on Friday said, "Uh-oh, I got to cover above this 51.17 and get out." And then once it comes back below, okay, this 51.17, that is your short entry, especially if it closes below, and then you put a stop at the high of the day, and then you trail it. So there's a lot of ways to play it. Some people will wait and not try and anticipate and just wait for it to come back below this, then put a stop at the high. If you did that, you had like, what, a $3 risk, and you wound up making, almost $4 on this short. And then tomorrow, depending where it opens, if it opens here, you trade more short through today's low to see if there's continuation. Or you just say, I'm going to keep my stop at this point, and who knows? Some lady said $6 today. All right, for me, I traded a bit more actively because I use a tier system, and I'm not just a swing trader. I'm a bit of a momentum trader, a little price action trader. So I want to show you I use a 3 and 5 minute chart. I have about 6 monitors up, and one of them is a 3-minute chart. So let me show you what I saw on the 3-minute chart. If you look at the 3-minute chart of Netflix, you'll see there was a nice little wedge here. Okay, this was the move off the open. Let's go to a 5-minute. Actually, you can see it a little bit better. Okay, here was your 5-minute chart. Let's go actually to an 8-minute chart. So I want you to see the previous high. Okay, here you go from Friday. So this was, it opened up, pushed through the previous high, squeezed everybody. Okay, if you anticipated, you got squeezed, you were a little cooked. So what I did is I started looking at it right around here. I shorted a little bit around 53, just like an incubator trade, just to say, okay, I'm going to short around 53 versus the high, give myself a $1.25 stop on something that just almost doubled, in 6 sessions. And then it came off the high, felt a little bit better, and I'm like, okay, this thing breaks below 52.50, I'm going to add to it. So I added to it through 52.50, even though I usually should add, when it breaks below the 51.17, because that's the previous high. So if you didn't add at 52.50, what you did is you added when it broke through 51.17, or you just initiated if you didn't try and cheat and start a little early. And sometimes you start early, you get squeezed like everyone else did, the last 2 days. So this just felt like the day you could do that. So you shorted when it broke 51.17, came back up, retested, couldn't get back above, gave you confirmation, and then pow, moved from 51.17 all the way down to about 47. This is what you call the red dog reversal. Tier 1, Tier 2, maybe Tier 3. Then you cover along the way, and then you take home something, whatever you feel comfortable with. For me, I took home a Tier 1, and then I'll see how it trades tomorrow. No need to have excessive risk overnight because there's way too many things that you could do during the day. As far as the OAHs, they held in there. Banks still holding around. A lot of good stocks are still holding around. I looked at LVS today, and I haven't looked at LVS in a while, and everyone knows I love to hate this stock because it's like the devil. It always draws you back. Because look at the size of this range. Look at this range. It's like 2 years, I think, even more. You go to your monthly chart, it looks even better. Okay, you spread this bad boy out, and you see, look at this tight range. So the big move, you remember, I think it was 2 years ago, this was one of my babies. I was trading it through 19, sold it, I think, at 40, and then we remember we had the whole little short scenario that hurt, but whatever, we won't get into that for now. But PS, tight range. Going across, somebody's accumulating it. Someone doesn't care that it came from all the way down here. So this thing starts getting above 48, 49. This actually looks like a little bit like cup and handle, right? Here's your cup, here's your handle. The depth of the cup, believe it or not, is almost about 30 points, if not more. That takes you back to, maybe 80 to 100 at some point. Anyway, that would be great because we love to trade this when it moves around. Look at the monthly, and then you go to the weekly. It also looks like it's right there. So we'll see. If you want to be a macro long in LVS, maybe go out, take some options, or just sit in it. You buy it here around 48, you put a $5 stop at 43 because it shouldn't get back below there. And if it comes out with good earnings, you're involved. And chances are if this really ignites and goes, you could probably have $10 to $15 on the upside versus your $5 downside. Win's a little bit different story. Win, we've had a nice trade here, starting from when it broke this downtrend. That's why sometimes there are different types of trades, and we love it when they break downtrends, because then sometimes they give you continuation. We drew this scenario here. Actually, I think this was the day that Goldman Sachs, or what was the day that the whole shareholder scenario? Let me see. Let's put the volume in here. The volume, boom. That was this day. This was the day the class action suit or the shareholder lawsuit wouldn't go down, reverse strongly. That got my attention. And then we played it for this 3-day move from 110, 112 all the way to 119. Now it's holding sideways, flagging. And there's no reason why, with some time and some patience, this thing can't get to 130, especially if the casino stays strong. So I would stay with that trade. I wanted to buy a dip, but today I just lost sight of it because I was too wrapped up in Shield. And so all in all, there's a lot of action, and a lot of people are waiting for some kind of juicy short. Don't wait for the juicy short. You could be holding multiple positions, buying dips, and it's been behaving a lot better than trying to catch a short that everyone's looking for. You could do it in individual stocks. You saw that with Netflix. You saw that with Amazon. You saw that with Shield today. You saw that with a lot of different scenarios. But the indices just seem like there's not much downside there yet. Again, if perhaps we trade and break this ascending channel, I'll draw this ascending channel, that's been in play since we started breaking out and going, then it's a different story. Then maybe you look at a more broader uptrend, then maybe we get a test down to this area or so. But until we break this ascending channel, which usually does break to the downside, just stay the course, stay light, stay quick on your feet, and it's been a great 4 to 5 week trading market. So tomorrow, it's Alex and I. We're going to also try and do, myself and Taylor, we're gonna do a video around 2:45 each day. We're going to call it like 5 and 50, not 50 minutes, 5 and 5, something where we go over 5 trades that could work in the last hour, both long and short. It's going to be from a perspective of, she's part of my group. Like, I have some clerks around me, some teammates that I'm training, and she's one of them. So we're going to give you a little perspective on, she'll ask me why I do certain things, probably questions that you yourself would be asking me if you're watching this. Well, why was today the day in Shield? Or why use this point as your stop? So we're going to try, that was a bad voice to use because those are good questions. Anyway, but it's going to be more of where, she hasn't been doing media for years and years and years, but she has what it takes. She's trading much better. I believe that she's going to make a lot of money in this business, so I want to start her early, and we're going to start doing a video and put a little bit of a, not say like a teacher-student relationship, but it's going to be that type of relationship where we go over things that I might see trigger for the afternoon and give you just some more fresh idea flow on what's cooking, if we can close strong or close weak, or if just figure it out and give a few extra, throw a few more fishes in the boat just in case you're having a tough time with the bait. Anyway, with all that said, it's only Monday. Geez, congratulations again to the Giants. Good to I'm not a Giant fan, but I like the Giants. I'm actually a Jet fan, and I feel sorry for myself and the team on how boisterously loud Rex was and how the foot is in his mouth deeper and deeper as the Giants just, showed their performance on the field and just, speak through, they spoke through performance, which is kind of the way I like to trade and lead by example. But anyway, so I feel a little, pissed off at the Jets. But the Giants, again, like I'm a New York team, I'll root for them. So it was nice to see them pull it off. Great to see Eli Manning, a class act, just keep getting up after getting sacked. And, same thing in life, man. Just get up after getting sacked, brush yourself off, and then throw that next route and see what happens from there. With that said, I think I said with that said a few times, have a great evening. See you at the morning call. Have a good night.